Hey everyone, welcome back to the Crypto Code. Today we're breaking down a major forecast from billionaire investor Paul Tudor Jones, one of the most respected traders of the past 4 decades. He's warning that the market is entering one final explosive rally before it all comes crashing down. But while the risks are high, the potential upside could be just as massive. Let's talk about it. Before we jump into today's topic, we want to remind you that here at the Crypto Code, our goal is to provide you with the top news, research, and tips when it comes to finding projects with huge profit potential. Stay to the end of this video and learn how you can earn $10 in Bitcoin and a free weekly trade alert just for attending one of our free workshops to learn more about who we are and what we do. No purchase needed. Our trade alerts have a 93% win rate, so make sure you take advantage of this free alert. Remember, I am not a financial advisor. This is not financial advice. So do your own research before you make any crypto trades. Okay, so Jones believes we've entered the late stage of a long bull market, one that looks a lot like the final stretch of the 1999 dot-com boom. Back then, investor enthusiasm sent tech stocks skyrocketing before the bubble burst. He sees the same pattern forming today, a period of euphoria fueled by easy money, government spending, and investors chasing gains with little regard for risk. In short, the setup looks almost identical to the conditions that preceded the last great melt-up. What makes this period even more powerful, according to Jones, is the policy backdrop. In the late 1990s, central banks were tightening to control inflation. Today, the opposite is happening. Interest rates are falling, liquidity is expanding, and governments are running record deficits to stimulate growth. That combination of loose fiscal and monetary policy, he says, hasn't been seen since the post-war era. It's creating an environment where prices can rise far faster than the underlying economy, setting the stage for one last burst before the cycle ends. So, where's he putting his money? Jones is focusing on assets that thrive in periods of excess liquidity: gold, Bitcoin, and high-growth tech stocks. Gold has surged this year. As investors hedge against currency weakness, Bitcoin continues to benefit from institutional adoption, and tech remains the primary driver of market momentum. Even speculative sectors like meme stocks are heating up again, which Jones sees as another sign of late cycle excitement. His view is that it's worth participating in this rally, but with an exit plan ready. To manage that risk, Jones relies on one of the simplest but most effective tools in trading, the 200-day moving average. As long as markets remain above that level, he believes momentum is intact. But when prices drop below it, that's often when sentiment flips and the reversal begins. It's his way of staying disciplined in a market that can turn from euphoria to panic in a matter of weeks. Beyond stocks and crypto, Jones is deeply concerned about what he calls the sovereign debt bubble. Around the world, governments are borrowing at unprecedented levels, and investors are loading up on bonds expecting more rate cuts. He believes this demand has been pulled forward from the future, leaving markets vulnerable once those expectations fade. When that shift happens, debt markets could face major volatility and the shock would ripple across all asset classes. He's also keeping a close eye on artificial intelligence, calling it both a huge opportunity and a source of new risk. AI is driving productivity and market gains, but corporate spending on safety and oversight remains minimal. Without balance, the same technology lifting markets could also amplify inequality and instability. At the heart of Jones's warning is a principle as old as markets themselves. Every bull run ends with too much leverage. Whether it's margin debt in 1999 or overextended derivatives today, excess borrowing always triggers the fall. Jones believes we're not there yet, but getting close. That means investors can still profit from the current momentum as long as they stay alert and act fast when conditions change. In summary, Paul Tudor Jones expects one final surge before the cycle resets. He's betting on assets like gold, Bitcoin, and tech to lead the charge, but he's preparing for volatility once the liquidity fades. His message is simple: enjoy the upside, but stay disciplined, follow the data, and always know when to step aside. Because when this rally ends, it could end faster than anyone expects. Thanks for watching the Crypto Code. If you found this video helpful, please like, subscribe, and hit the notification bell for more crypto insights. Let me know your thoughts on today's video in the comments below. You can also check out what we do here at the Crypto Code by registering for one of our free workshops where we show you how we and our students profit in crypto no matter if the markets are up or down. If you register for the workshop, you also get access to a free weekly trade alert. Attend our free workshop, take a short quiz at the end, and we will send you $10 in Bitcoin. No purchase needed. We've already given away hundreds of thousands of dollars worth of Bitcoin just this year alone. Just look for the link in the description of this video to register for the workshop. It will be worth your time. Our public trade record currently has a 93% win rate, and you can view it here. Best of luck with your investments, and remember to stay informed and stay safe in the crypto world. See you next time.